Picture this. It's a Tuesday morning and you're scrolling through your phone with your coffee. Suddenly you see it. Costco's website. Silver coins available now. You click, you add to cart, you enter your payment information, and then nothing. Sold out. In less than 1 hour, gone. 2.4 million ounces of silver. Vanished in 72 hours. That's not a typo. 2.4 million ounces. I'm talking about something that just happened at Costco. And it's not just about silver coins. This is about something much bigger. Something that could change how we think about money, investing, and what's really happening in our economy right now. My name is Josh, and this is the American Guy Finance. And today we're diving deep into the Costco silver panic. We're going to uncover what really happened, why it matters to you, and what this tells us about the future of precious metals and our financial system. By the end of this video, you'll understand why thousands of people are rushing to buy physical silver. You'll learn about the dangerous gap between paper silver and real silver, and you'll discover what smart investors are quietly doing right now while everyone else is asleep. This isn't financial advice. I'm not telling you to buy or sell anything, but what I am telling you is this: something fundamental is shifting, and Costco might be the canary in the coal mine. Let's get into it. The Costco phenomenon. So let's start at the beginning. How did Costco, a warehouse store famous for bulk toilet paper and cheap big screen TVs, become ground zero for a precious metals buying frenzy? It started in September of 2023. Costco announced they were selling gold bars, not just any gold bars, 1-ounce gold bars from major refiners, and they were selling them at prices lower than most precious metals dealers. The response was immediate. The bars sold out within hours, then they restocked. Sold out again, hours. Fast forward to 2025. According to Wells Fargo estimates, Costco is now selling $100 million to $200 million worth of gold and silver every single month, every month. Think about that number. That's more than many dedicated precious metals dealers sell in an entire year. Then came the silver. In early 2024, Costco started offering silver coins, specifically American Silver Eagles and Canadian Maple Leafs. These are official government-issued coins, 1 ounce of pure silver each, sold in tubes of 20 coins. The pricing was competitive, sometimes really competitive. Costco's massive buying power allowed them to offer relatively low premiums over the spot price of silver. That's the markup above the raw metal value. But here's where it gets interesting. Costco limited purchases to 2 tubes per member. That's 40 coins total, about 40 ounces of silver. Why the limit? Because demand was absolutely insane. Members of the Costco Precious Metals subreddit, yes, that's a real thing with thousands of active users, started tracking when silver became available. They would post alerts, they would share screenshots, they would coordinate, and every single time, the same pattern. Available. Gone within an hour, sometimes less. The former chief financial officer of Costco, Richard Galanti, confirmed this publicly. He said the supply usually sells out within hours of release, sometimes faster. This created what retail experts call a treasure hunt experience. You had to be watching, you had to be ready, you had to be fast, and thousands of people were doing exactly that. Segment 2, the 2.4 million ounce event. Now let's talk about what happened recently. The event that's making headlines right now. Over a 72-hour period, Costco members purchased approximately 2.4 million ounces of silver. That's roughly 120,000 tubes, 60,000 members buying their maximum limit. To put this in perspective, 2.4 million ounces is about 75 tons of silver. 75 tons. Moved through a single retailer in 3 days. The total value? At current silver prices of around $32 per ounce, that's roughly $77 million in silver in 72 hours from one company. But here's what makes this truly remarkable. This wasn't institutional buyers. This wasn't hedge funds or mining companies. This was regular people, Costco members, your neighbors, maybe you. Why does this matter? Because it represents a fundamental shift in how everyday investors view precious metals. This is retail demand, grassroots demand, and it's accelerating. According to data from the Costco website and community tracking, the frequency of silver availability has been increasing. They're restocking more often, but it's still selling out just as fast, if not faster. This tells us demand isn't being satisfied. It's growing. The Reddit community tracking these sales has exploded. The Costco Precious Metal subreddit has become one of the most active investing communities on the platform. Users share strategies. They debate the best times to check the website. They post photos of their purchases. One user wrote, "I've been trying for 3 weeks, finally got my 2 tubes. I refreshed the page for 45 minutes straight. Another said, "This is harder than getting concert tickets." That's the level of demand we're seeing. People are treating this like a limited edition product drop, like sneakers, like video game consoles during a shortage. Except this isn't a toy, this is money, physical money, and that distinction is crucial. Segment 3. Why silver demand is exploding. So why is this happening? Why are thousands of people suddenly desperate to own physical silver? The answer isn't simple. It's a combination of factors, all coming together at once. First, let's talk about price performance. In 2025, silver has seen gains of 114% year to date. 114%. That's a staggering return. Meanwhile, gold hit over $4,400 per ounce in December of 2025. That's up from below $2,000 in October of 2023, roughly doubling in just over 2 years. These aren't small moves. These are the kind of gains that get people's attention, that get them asking questions. Second, there's inflation. Real inflation. The kind you feel at the grocery store, at the gas pump, in your rent payment. Official numbers say inflation is moderating, but consumer experience tells a different story. Many Americans feel their purchasing power declining, their savings not going as far. Historically, precious metals have been seen as a hedge against inflation, a store of value when currency loses value. This perception is driving demand. Third, there's economic instability. Concerns about recession, concerns about debt levels, concerns about the banking system. When people worry about structural problems in the economy or government, they often turn to gold and silver. These are tangible assets. They can't be printed, they can't be inflated away. As one expert put it, buying gold means people think there's some type of instability at the structural level of the market or the government itself. Fourth, there's accessibility. This is huge. Costco made buying silver easy. No intimidating coin shops, no complicated dealers, just add to cart, like buying anything else online. You're already a Costco member. You already trust them. You already shop there. Now you can buy silver the same way you buy your groceries. This democratization of precious metals investing cannot be overstated. It's bringing in buyers who would never have walked into a coin shop. Fifth, there's the Costco value proposition. Even with a membership fee starting at $65 annually, Costco's pricing on silver is competitive, often very competitive. Traditional precious metals dealers charge premiums of 5 to 10% or more over spot price. Costco's premiums are often lower, sometimes significantly lower. For buyers purchasing multiple tubes, these savings add up quickly. Finally, there's social proof and FOMO, fear of missing out. When you see posts on social media, when you hear friends talking about it, when you see silver selling out in an hour, you start thinking, maybe I should get some too. Maybe they know something I don't. Maybe I'm missing out. This creates a reinforcing cycle. More demand, more sellouts, more urgency, even more demand. All of these factors together create the perfect storm, and that storm is what we're seeing at Costco right now. Segment 4. The paper versus physical silver gap. Now we need to talk about something most people don't understand, the difference between paper silver and physical silver, because this difference is at the heart of what's happening. When most people think about silver trading, they think about the price they see on financial websites. $32 per ounce, or whatever the current number is. That price is determined primarily by the COMEX, that's the Commodities Exchange. It's part of the Chicago Mercantile Exchange. This is where silver futures contracts are traded. Here's the thing, most silver traded on COMEX is paper silver. It's contracts, promises to deliver silver, not actual physical silver changing hands. In fact, the ratio of paper silver to physical silver is estimated to be somewhere between 100 to 1 and 250 to 1. For every ounce of physical silver that actually exists, there are 100 to 250 ounces of paper claims on silver. Think about that. It's like a bank having $1 in the vault but writing $250 worth of IOUs. As long as everyone doesn't ask for their money at once, the system works. But what happens when they do? This is called a delivery crisis, or a physical squeeze, and it's exactly what some experts are warning about. Here's how it works in practice. Large institutions trade silver futures. These are contracts to buy or sell silver at a specific price on a specific date. Most of these contracts are settled in cash, not physical delivery. The traders don't actually want the silver. They want to profit from price movements. They're speculating. So when the contract expires, they just settle the difference in cash and roll to a new contract. But there's always an option for physical delivery. Anyone holding a contract can demand physical silver. And this is where things get interesting. The London and New York metal markets are showing signs of distressed silver availability, meaning there are concerns about whether there's enough physical silver to meet potential delivery demands. Multiple Costco locations have little or no silver bullion for sale, not because Costco doesn't want to sell it, but because they can't get enough supply. This is happening at other dealers too. Premiums are rising, wait times are extending, some products are simply unavailable. So you have two markets, the paper market, where massive quantities of silver trade daily at relatively stable prices, and the physical market, where actual silver coins and bars are in high demand and increasingly hard to obtain. The gap between these two markets is widening, and that gap is dangerous. If enough people start demanding physical delivery, if enough investors lose faith in paper claims, if enough retail buyers want actual silver in their hands, the system could face a serious problem. There might not be enough physical silver to satisfy demand at current prices, which means prices would have to rise, potentially dramatically. This is what some analysts mean when they talk about a potential silver squeeze. Not manipulation, not conspiracy, just basic supply and demand playing out when physical delivery is demanded. And Costco's sellouts, they might be an early warning sign, a signal that physical demand is outpacing supply in the retail market. Segment 5. The COMEX pricing problem. Let's dig deeper into the COMEX pricing mechanism, because understanding this is crucial to understanding what might happen next. The COMEX sets the global price benchmark for silver. When you see a silver price quoted anywhere, it's based on COMEX futures pricing. This system has worked for decades, but it relies on an assumption. That assumption is that physical delivery will remain the exception, not the rule. The exchange has physical silver in its vaults. Currently, that's around 300 million ounces. That sounds like a lot, but remember, we're talking about billions of ounces of paper silver claims. If even a small percentage of contract holders demanded physical delivery, the COMEX would face a problem. They simply don't have enough silver to satisfy everyone. Now, the exchange has mechanisms to handle this. They can raise margin requirements, they can limit position sizes, they can even change settlement rules in extreme circumstances. But here's the key question. What happens if retail buyers, people buying at Costco and other dealers, start pulling so much physical silver out of the market that it affects availability for COMEX delivery? What happens if industrial users, companies that need silver for manufacturing, start hoarding because they're worried about supply? What happens if other countries start buying physical silver for strategic reserves? The COMEX pricing mechanism depends on abundant physical supply backing those paper contracts. If physical supply becomes constrained, the system faces stress. Some analysts argue we're already seeing early signs of this stress. Backwardation in silver futures markets. That's when near-term contracts trade at higher prices than longer-term contracts. It suggests tightness in physical supply, widening spreads between bid and ask prices. That suggests lower liquidity and higher uncertainty. And of course, the retail shortages we're seeing at Costco and elsewhere. None of this means the system is about to collapse tomorrow. But it does suggest tension between paper pricing and physical reality. If this tension continues to build, something will have to give. Either physical supply increases dramatically to meet demand, or prices rise to reduce demand, or some combination of both. The Costco silver panic is important because it represents thousands of regular people effectively voting with their wallets. They're saying, we want physical silver, not paper claims. And when enough people make that choice, it changes market dynamics. Segment 6. The problems with buying silver at Costco. Now, before everyone runs to Costco to buy silver, we need to talk about the problems. Because yes, there are problems. First, the shipping and packaging issues. This has been a major complaint. Costco's silver coins have a rating of only 3.3 stars on their website. That's not good. Why? Not because of the coins themselves. The American Silver Eagles and Canadian Maple Leafs are legitimate, high-quality coins. The problem is how Costco ships them. Numerous customers have reported problems with packaging, broken seals on the tubes, coins spilling during shipping, scratches and damage to coins. When you're buying these coins, you're not just buying silver content. You're buying collectible coins. Condition matters. A scratched or damaged coin is worth less than a pristine one. One customer wrote, "Tube arrived with the seal completely broken. Coins were loose in the box. Several had visible damage. Very disappointed." Another said, "For the price we're paying, the packaging is unacceptable. Any coin dealer would pack these better." This is a legitimate concern. Costco is great at shipping bulk goods, but precious metals require special handling, and it seems they're still working out the kinks. Second, the membership cost. A Costco membership starts at $65 per year. For the average consumer buying small amounts of silver, this cost could potentially outweigh the savings. If you're only buying 1 or 2 tubes of silver per year, paying $65 for membership might not make economic sense. You'd need to buy enough to justify that annual fee. Of course, if you're already a Costco member for other reasons, this isn't an issue, but it's something to consider. Third, the no buyback policy. This is huge. Costco does not buy silver back. Once you buy it, you own it. They don't accept returns on precious metals, and they offer no way to sell it back to them. Traditional precious metals dealers typically offer buyback programs. You can sell your metals back to them when you want to take profits or need cash. With Costco, you'd need to find another buyer. A local coin shop, an online dealer, a private buyer. This adds complexity and potentially cost when you want to sell. Fourth, the availability problem. Yes, we've talked about high demand, but from a buyer's perspective, this is frustrating. You can't just buy silver when you want it. You have to watch. You have to wait. You have to catch it when it's available. For someone wanting to dollar cost average into silver, buying small amounts regularly, this is nearly impossible at Costco. Fifth, limited selection. Costco offers only a few products. American Silver Eagles, Canadian Maple Leafs, maybe 1 or 2 others. That's it. Traditional dealers offer dozens or hundreds of different silver products, bars, rounds, different sizes, different designs, more flexibility. Finally, there's no expert guidance. When you buy from a specialized precious metals dealer, you can talk to someone knowledgeable, ask questions, get advice on storage, insurance, tax implications. Costco is self-service, add to cart, check out, you're on your own. These problems don't mean buying silver at Costco is bad. For many people, it's still a good option, but you need to understand the limitations. Segment 7. What smart investors are doing. So with all this happening, what are experienced precious metals investors actually doing? What's the smart money doing? First, they're diversifying their precious metals holdings, not putting everything into silver, not putting everything into gold, spreading across both and sometimes other metals like platinum or palladium. They understand that different metals serve different purposes. Gold is the traditional store of value. Silver has more industrial applications. Platinum has unique uses in catalytic converters and other industries. Diversification reduces risk and provides different potential upside scenarios. Second, they're buying physical metals, not just paper claims. This goes back to our earlier discussion. They want actual coins or bars in their possession or in secure allocated storage. They're avoiding unallocated storage, where you own a claim on metal but don't have specific bars or coins assigned to you. They're avoiding pure paper products like ETFs that might not be fully backed by physical metal. Third, they're dollar cost averaging. Instead of trying to time the market, buying everything at once, they're making regular purchases over time. This smooths out price volatility. Maybe they buy a set amount every month or every quarter. Sometimes they're buying at higher prices, sometimes at lower prices. Over time, they average out. Fourth, they're thinking about storage. Physical metals need to be stored securely. Smart investors are considering home safes, bank safe deposit boxes, or professional vault storage. They're also thinking about insurance, protecting their investment against theft or loss. Fifth, they're keeping perspective. They understand that precious metals should be one part of a diversified portfolio, not the entire portfolio. They're not selling all their stocks, emptying their retirement accounts, or going all in on silver. They're allocating a portion of their wealth to precious metals as insurance and diversification. Many advisors suggest 5 to 20% of a portfolio in precious metals, depending on individual circumstances and risk tolerance. Sixth, smart investors are educating themselves. They're learning about different types of silver products. They're understanding premiums and markups. They're researching reputable dealers. They're learning about the difference between numismatic coins, collectible coins valued for rarity and condition, and bullion coins, valued primarily for metal content. Seventh, they're watching the industrial demand picture for silver. Unlike gold, which is primarily monetary, and jewelry demand, silver has massive industrial applications. Solar panels, electronics, medical applications, electric vehicles, 5G infrastructure. All of these use silver. As these industries grow, industrial demand for silver increases. Smart investors are paying attention to these trends. Understanding that silver has dual demand drivers, both investment and industrial, makes it potentially more volatile, but also potentially more upside. Finally, they're staying patient. They're not panicking. They're not FOMOing into purchases at any price. They're making thoughtful, strategic decisions. They understand that precious metals are long-term holdings, not get-rich-quick schemes, not day trading vehicles, long-term wealth preservation and potential appreciation. Segment 8. What this means for the future. So let's bring this all together. What does the Costco silver panic tell us about the future? Where is this headed? First, retail participation in precious metals is increasing dramatically. The barriers to entry are lower. The accessibility is higher. More regular people are becoming precious metals investors. This trend is likely to continue. As financial uncertainty persists, as inflation concerns remain, as trust in traditional financial systems fluctuates, more people will seek alternatives. Silver and gold represent tangible wealth, something you can hold, something that's existed as money for thousands of years. That appeal isn't going away. Second, the gap between paper and physical markets may continue to widen. As more people demand physical delivery, as more retail buyers want coins and bars in hand, supply constraints in the physical market will likely persist. This could eventually force changes in how precious metals are priced. The COMEX system may need to adapt, either by requiring more physical backing for contracts or by seeing prices rise to reflect physical scarcity. Third, we may see more mainstream retailers entering this space. If Costco is selling hundreds of millions of dollars in precious metals, other retailers are noticing. Walmart, Amazon, Target, others might test this market. This would further increase accessibility and normalize precious metals ownership for average consumers. Fourth, regulatory scrutiny may increase. When millions of regular people are buying precious metals, when transactions are happening through mainstream retailers, regulators pay attention. We might see new reporting requirements, new tax considerations, new rules around precious metals, sales, and storage. Fifth, industrial demand for silver will likely remain strong or increase. The green energy transition requires massive amounts of silver. Solar panels alone could consume significant portions of annual silver production. Electric vehicles use more silver than traditional vehicles. 5G infrastructure requires silver. If these trends continue, industrial demand could put additional pressure on silver supply. This creates an interesting dynamic. Investment demand pulling silver into retail channels like Costco, industrial demand pulling silver into manufacturing, both competing for limited supply. Sixth, we may see innovation in precious metals products, fractional ownership, blockchain-backed metal tokens, new storage solutions, new ways to buy, sell, and hold precious metals. Technology could make metals even more accessible while addressing some current limitations like liquidity and storage. Finally, this could signal broader concerns about the financial system. When thousands of people are rushing to buy physical silver, it's worth asking why. What are they worried about? What do they see coming? Maybe it's inflation. Maybe it's debt levels. Maybe it's currency debasement. Maybe it's just diversification and prudence. But the Costco silver panic is a symptom of something larger, a growing desire for financial security outside the traditional banking system, a search for stores of value that can't be manipulated or printed. Whether that concern is justified or not, the trend is real and growing. Conclusion. So let's wrap this up. What have we learned today? Costco sold 2.4 million ounces of silver in 72 hours. That's not just impressive, that's unprecedented for a mainstream retailer. Silver demand is exploding, driven by price gains, inflation concerns, economic instability, and unprecedented accessibility through retailers like Costco. There's a dangerous and widening gap between paper silver and physical silver. Most silver trading happens on paper, but retail buyers want physical. This creates tension in the market. The COMEX pricing mechanism may face challenges if physical delivery demands increase. The current system depends on most contracts being settled in cash, not metal. Buying silver at Costco has problems. Packaging issues, no buyback program, limited selection. But for many buyers, the competitive pricing and convenience outweigh these concerns. Smart investors are diversifying, buying physical, dollar cost averaging, and keeping precious metals as part of a balanced portfolio. Not going all in, being strategic. The future likely brings more retail participation, continued supply constraints in physical markets, and potentially higher prices if demand continues to outpace supply. Here's my final thought. Whether you buy silver or not, is your decision. Whether you think precious metals are a good investment is your call. I'm not giving financial advice. But what I am saying is this: pay attention. What's happening at Costco is a signal. Maybe a small signal, maybe a big one, but a signal nonetheless. Thousands of everyday people are making a choice. They're converting some of their paper dollars into physical silver. They're doing it urgently. They're willing to wait online, refresh web pages, and compete for limited supply. That tells you something about their level of concern and their level of interest. If Costco is the canary in the coal mine, as many are suggesting, then the crisis may already be underway. Not a crisis of panic, but a crisis of confidence. A crisis of paper versus physical, a crisis of supply versus demand. What you do with this information is up to you, but now you understand what's happening. Now you know why it matters. Now you can make informed decisions. If you found this video helpful, please hit that like button. Subscribe to the channel for more content on finance, investing, and economic trends that actually affect your life. Leave a comment below. Tell me what you think. Are you buying silver? Why or why not? And remember, knowledge is power. The more you understand about how money works, how markets work, and how the financial system operates, the better positioned you are to protect yourself and your family. Thanks for watching. I'll see you in the next video. Stay informed, stay prepared, and stay smart.